Ready to minimize risk with better diversification? Create the perfect investment playlist. Imagine you throwing a party and curating the music playlist. Would you play the same song on repeat for hours? Definitely not. You'd mix things up with fast beats, slow tunes, and maybe even some classics to keep the energy flowing. The same goes for your investments. This is called diversification. Just like a party needs variety, your investment portfolio needs a mix of different asset classes to stay balanced and reduce risk. Instead of putting all your money into one type of investment, like only stocks or bonds, you spread it across different types, just like mixing up fast beats, mellow tunes, and throwbacks. This helps protect your portfolio if one area struggles. If one investment isn't performing well, others can keep the vibe alive, much like a great mix of music. Just as a playlist with only one type of music can get boring, putting all your money into one asset class exposes you to more risk. Diversification spreads your investments across equity, fixed income, commodities, and even real estate, ensuring that if one asset class dips, others may still be doing well, keeping your investment journey smoother. In the end, diversification is about crafting the ultimate playlist for your money. Mix it up, let the rhythm of your portfolio stay steady, and enjoy the ride. Just like a perfect playlist keeps the party going. So remember, spread your investment, reduce risk, and keep your portfolio balanced. Stay tuned for more tips on building your financial future. Until then, keep learning, stay healthy, see you soon.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.